All right. Let me see something real quick. Weird. I wonder what would happen after. Oh well, it is what it is. Cleaned up. I don't like that. Um. All right. So first of all, let me put up the Just Forex account so you guys can see it. It's still at 400 since so, but we're gonna remove $300. Take out $300. Why? So basically, we're starting again all over from the beginning. Why are we doing this? Well, because we spent $300 in buying a funded account. Why did we do that? I don't know. It just seemed fun, and so I was thinking, if I buy a funded account with this $300, right, and I continue my trade with my $400 and continue doing my thing, but if I hold this funded account, then then give me 1 second here. All right, then if I hold the funded account, and because I use the money, the profit from this our challenge account, because I use the profit from our challenge account, so it's seen as a $400, right? So because I use profit from our challenge account, we okay, interesting. We because I use the profit from our challenge account, whatever profit we make on this on the funded trader account, we will uh we'll count that as profit for our challenge. If you don't get it, you don't get it. Don't stop me, please. Basically, that's it. So we'll be doing a lot of things. So now that we have that money from that challenge, if we, we'll start trading with that challenge probably from Thursday. Tomorrow's Wednesday, right? So probably from Thursday. Today's today's Tuesday, yeah, yeah. 'Cause I didn't work out today, so I exercised, but I didn't work out. So we probably start trading from Thursday because that's when the account probably be set up. We have a laptop to our side here that we're using for that trade, and yeah, that's it. We'll just be trading two accounts now. That's all it is. Um, so what are we trying to do today? Today itself. Let me. So again, we're at 400 now. There's a reason why. So we made 300 profit. We spent that 300 profit on outside stuff. So we're back to 400 to 1 mil. Oh gee. Um. So what are we doing today? We're here to back test. And before we actually do the actual live back testing, I want to check. So we've done a bunch already. We've done up to from here down. So what I want to check is this. I was thinking of, so my new idea is this. What if I take my trades, right? I take my trades long. What if I take my trades? What if I split because I'm risking 25% per trade, right? So what if I split it to risking 12.5% per trade? Huh? And then, so my first trade, I'll take it at 12.5%, right? Uh, and I'll be risking obviously the bottom. And let's say I take it on this candle, or Or let's say I take it on, yeah, let's say I take it, so on this particular trade, it would have been on this candle, right? So, but let's say I take it on this candle even. I doubt I'll take it on this candle. Let's just say I take it on this candle. I take it at 12 point, because now I'm risking half of my main risk. So I'm more, let's be more aggressive. You get what I'm saying? A lot more aggressive. Stop shouting, Michael. Shut the fuck up. All right, so let's say we take it here on this black candle. We take our first trade there, we reach the bottom, right? And then the next trade, we only take it after it breaks, after the 5 minute candle makes a new high. So this kind of occurs, and then that looks really good. And then once it breaks like this, once it breaks here, now the question is, should we take it on the break or should we take it on the close? I argue we should take it on the break. I think we should take it on the break, not the close. Yes, we take it on the break. So we take the next trade, break there. So now we'll have two trades and basically close to each other. Yeah, we'll take it on the break. It'll break up nicely. Probably it'll probably be up here and down here. We'll have an average probably here, and then we'll look for 2 hour. So let's see other trades. So this was a nice drop here from that. Held it, came rejected. By this time we're not trading anymore. So and then here, let's say I want to take a trade here on the breakout. So we take 12.5% risking down there, right? And then when the candle closes and it closes well, we'll take another 12.5% risking down there. So our average will be somewhere here, and we're looking for continuation. Yes, sir. So that's what those kind of trades will look like. Yes, sir. Yes, sir. And then trades like this, we can take 12.5%. And yes, sir. Oh, yeah. So 7:30 here. Um, why did we take this trade? So there was nothing here. There was a line here. This was this kind of base. There's this consolidation zone here, so you can draw this base here. There was a base here for sure. Right, there's a base here for sure. Also, no, this was not a short. You can take a long here, risking low of day, 12.5%, and then when that candle occurs, you take another long, or you take another long, 12.5%, risking low of that candle. Right, so 240, looking for 480 basically. You can take it on this candle, risking there. I mean, same thing. So if you took that 12.5% here, risking low of day, and then this happens, I guess you can add the 12.5% there, risking low of day. Maybe even more on that one here, on this break, risking down there. Just like we took it on that break. I don't know, it was on this candle would have taken. So we had one here. No, why are we taking this trade? I don't know what this trade. Because it's definitely not a long. Yeah, it broke the high, but it's not a long. At 7:25, there would have been a base here. There would have been a base here. There would have been a line here. There would have been another base here. Right? So at 7:25, this base here, for sure, because of this drop, this base here, we broke above it nicely. So the trade would have been on this candle. Because there was a lot of rejection on this one, so you don't want to take it. Risk is down there. So trade, I guess trade can be on this second candle here. First one there, and then once this one broke and once it broke and closed, right? We say we're taking on the break, right? Yeah, on the break. So once it broke, we'll take that trade. So it would have been 1, 2, risking the low of the base, and then it'll be under 12.5% here, risking that low there or here, because this one, the reason why we risk here, because there was no other point to risk. This one probably risk down there, so it'll have been something like this, probably. It also looks good as a demand zone, and then that would have been it really. We know that the next trade has come to this zone, so on this candle take 12.5%, and then on the break of this candle take another 12.5%. So our average will be here. Now let's see where it's good for us, is what I'm thinking. Because now, if we are taking, let's say this low happened, and then boom, let's say we stupidly took a trade here long, right? And we took a trade here, we were risking down here, right? But we're only now using 12.5% versus the 25% would normally take because it never broke above. It just we just lost. I think that's better. I think that's better. So now I trade here. So here we risk 12.5%. It's 730 or 735. So a little rejection. We risk 12.5% on this low here, right? Is that what we should do? We had this zone. I trade for the 5 minutes. It's pretty close, so probably be low there. This should probably lose 25% on this trade. I think that's all that happened because we would have taken like I don't know. This candle was too rejection was really bad, so probably not. But if we took this trade, then we would have had to take this next trade to it would be 25%. But if we didn't take this trade, we'll be waiting. We'll probably take this trade 12.5%, risking down there or risking that low there, and then when this candle broke, we add the next 12.5%, risking its endpoint. And then when it gets up here with the rejection, we take our short 12.5%. When it breaks, add the next 12.5%, risking up there. And that would have been our trade. I like this 12.5%. I'm going to add it. This is what we're going to start using. If you have a problem with that, that's unfortunate now, isn't it? Absolutely unfortunate. So same thing here, top because we can be more aggressive with our trades now. I guess that's what I'm getting at. Can be more aggressive with our trades. 12.5% on this one here. We don't have to even add. If it looks good, if it looks as good as this, you can always add, I guess. But you don't really have to add on this if you took a long 12.5% here. It looks good. Then should we wait for the close or should we wait for the? Should we just take it on the break? Even if we wait for the close, it's still fine. Like here, we'll not take it straight. We'll add it there. So the good close. So the good close. So our average will be somewhere here. Let's say our average is even up here. Risking 240. Won't have gotten that, but yeah. If it was down here, would have gotten it. 175. Yep. 3. 175 is 3. 175 times 2 is what, bro? 50 plus 3 and 350, right? Yeah. Not a good close. We won't go full. Oh, take a breakout here, 12.5%. Good close. Good drawdown. I don't know. This was the flag. At 7:30 here, broke through. Would have a line right there. There'll be a base right there for sure. Base right here, kind of, I guess. Or red line. Let's call it the red line. And we're risking under. Yeah. Take a 12.5% trade here. Risking 4 under probably. So it'll be something like this. Risking 80, looking for 160. Right. Just because of this zone here, but otherwise it's fine. 12.5% there, and then add another 12.5% there. So good close, right? Average is now here. So it would now be risking. So this would be 120, looking for 240 up here. 12.5%, adding 12.5%, and then we'll hold that. Something like this, something like this. Risking 120, looking for 240. Hmm. In here, if you're short here, in here will be, you probably have the urge to switch trades and risk down here, maybe even down here. Then you get stopped out. But the good thing is, if you're waiting for a close of a candle, let's say you took a trade here, right? Took a trade here, risking down here. You're waiting for a close of a candle. Yeah, you're probably taking this trade too. Sheesh. If you're taking it here, risking down here, you'd have only lost 12.5%. It was a rough day. Probably have one loss in here, and then you're probably looking for another trade, and you would get another trade. Nope, no trade here. No trade here. Probably take another trade here. Long, risking 12.5%, or risking down there, and then adding on this candle and holding, and then you'd lose that trade. So you lose 25% here, lose 12.5% here, make 25%, make 50%. You'd have made 50% here, and you would have made nothing here probably. So if we had switched trades versus holding and putting in break even, if I hit it at break even, would have made another 25, another 50% here. So that'll be 50% and then 50% here, and we'll be done trading by the time we get our profit. But if we had switched trades here, we'll probably make like 40% here and then lose 25%. and that'll be it. So it's either we made 50% first and then lost 50%, or we made no and then lost two trades, or we made 50% and lost we made 100% and lost 25%. So for this one, continuations, probably just take a 12.5% there, take another. This was the low here, right? But it's really falling, so you that kind of know. With this one, 12.5%, add another 12.5% there. And just hold, I guess. Falling knife at this point. At this point, you call it a falling knife and let it go. Waiting for it to show some kind of bullish trend. Nada, another 12.5% there. Maybe 50%, I guess. This one, you can take 12.5%, and then after this candle, I guess you can add another 12.5. And then same thing here, 12.5, add another one, 25%. So this is one of the candles that if you had waited for it to if you waited for it to close, you would only get the 12.5% trade. So when this kind of happened, this one happened, and here you probably only get that 12.5% profit, and then you'll be allowed to take a, so with this no, yes, take a 12.5% here, you wait, and then when it came back up, you're holding still, nothing really, no point to take a 12.5% trade. To take a second trade, there was no real rejection, you just hold. And then this didn't work, right? It was 125 looking for 250. Oh, it worked. And then this happens. Rejection, no rejection, no rejection. Pops up, holds here, pops up. You can take a 12.5% trade probably here. Risking down here, you'd lose immediately. Oh, there's so much rejection up there though. Oh, with this, there's, so you could have taken a trade here. Rejection, taking a trade here, risking 12.5% down below your lows, and then probably added on this actual take here. I'll probably added here or here. Before you know it, you're done trading for you. Okay, let's go take some trades. Using the 12.5%, 12.5%, 12.5%, using that. Short. Yeah. Thinking more, I'm like, bro, does it really help me or hurt me? Which one is it? Let me do one live trade and see. All right, so what do we have here? Prior day, we have this zone here. So we have this zone here. We have this zone up here. I'll actually just extend this one. And then there's this consolidation here. Kind of a zone too. Well, yeah. Put a line in that. And these, the rest have been traded through. This is already traded through. So for the day itself, we have this line here. We have this whole consolidation low here. I guess you could call this the base there. And we have this line here. We have the high there. Okay, let's see what's next. So 7:30 occurs. No rejection, nothing. There's this high here, but nah, we'll wait. Nice rejection on this. What does it look like? 120. Sure, we can take a short 12.5% there. Let's see. It's okay. It's really holding this line here. If we took this trade, we don't know where to risk really. So interesting. If we took this trade, there, I mean, there's this zone here, but we don't really know where to risk taking this trade. So if we took, it would be like this. For maybe fall below 80. And it will only be a 12.5% trade. It will only be a 12.5% trade. Or was it this highs? That was. But it's only 12.5% if we're not using our 25% off the get go. Okay, it's holding our zone. So 80 to 160. Profit target acquired on this candle even. Yeah, we had that line from that zone. It's a solid rejection, but there's no volume in it. Bunch of rejection on the top side. Good breakout. So we have now this zone. Looks like it wants to break the zone. So we took a 12.5% trade here. Took another one here, risking down break even on this pullback. Risking break even, so it'll be something like this. 90, looking for 180. Should we get in right on that breakout? And then let's say we took another one, risking up there. 60. Looking for 120. On the 1 minute, we wait for this type of zones to break fully. But on the 5, sometimes we just take the trade without it breaking. Sorry, we take a trade on the breakout, not without it breaking. We take a trade on the breakout sometimes. That's good volume. I like that volume short. You can say you want to take a 12.5% trade there, risking 4 above that, above the highs. Yeah, figures. Pure uptrend. It's on the pure uptrend, so to take it here, risking 12.5% above that high. It's really holding it there. Pure uptrend, eh? Interesting. Pure uptrend. So it would have had to be this. I was really holding this zone. So it would have had to be this. Taking it long, risking down there. 12.5%. Probably adding even on this candle here. 12.5%. So it was uptrending. So I had one there. If we waited, let's say we didn't take it because it didn't break much high. Came back down. Maybe we even took this one here. If we took this one here, then we won't be adding. This was probably it here. Waiting for a breakout in your call, take it here. Adding there, risking this break even. And then this is happening, pulls back down on this, pull back up. Add it there, risking this break even. This is one that supply trade there. So just like we're not trying to catch a falling knife, we're also not trying to catch a short on the stock that looks really clean uptrending. Okay. We're also not trying to do the most on our trading too. It's already 12:45, but I haven't done trading around here. So if we didn't take 12.5% here, so we took 25%, we would definitely not be able to take this one take this other trade here. We won't be able to just not do a trade. If I'm already risking 25% in a trade, I won't be able to take a second trade very quickly. But with 12.5%, 160 here. Then you see this consolidation. Take another trade here, risking down there. Risking 120. Looking for 240. Get 240 on this candle here. Get this pullback, watching. Pullback again, rejection. Probably take this trade here. This zone that was already there, risking on this low. 140, looking for 280. Looking for 280, which we get up here. So now, let's say we have 400 with our account, right? Times 1.5. We got, because we only got 3. If we use the 25% risk, now let's say we start from here, we took this trade here. We'll get out here. This is probably another trade inside the zone. After it broke, close above, risking down there. We got another trade. It's closed up here. We waited. We got this. We waited. We took this trade because we can risk down here. Risk down here. That'll be the last trade, right? Otherwise, we'll have to risk down here. If we did risk down here, we'll get out here. We'll probably then take this trade. So maximum of 4 trades. Maximum of 25 versus 12.5%. Let's say 12.5% getting that. So with this 12.5%, this one got us 160. We got that 160. With this one, we're only risking down here break even. So 90 points, looking for 180. We got our 180 on this candle here. So the way this one would have been would be 400 times 1.5 for this. Then 600 times, instead of 1.5 is times 2, because we get, so it'll be this risking down here, we get, and it closes up there right as we get on our next trade. So our next trade risking down here will be using the same risk as this one. So instead of 600 times 1.5, it will be, so it's a difference of 600 times 1.5, divided by 300 plus 300. So with this trade now, we'll probably close up there. That's on that 1200, and then this, wait, I'm doing times 1.5. So it'll be 400 times 1.25 times 1.25 plus 125 gives us 750. And then this trade risking down here, probably close up there. So times 1.25, this times 1.25, and then, so the difference is 200 minus 12.5, something like that. So plus, I just say 200, whatever. So we're at 1200 on this, and then here, what's it called? Risking down there, so times 1.25, 1400 max. And with the just taking the one trade 25%, we had a 1350 minimum, 1400 maximum, assuming we took this one risking. So because I'm risking 25%, I like to risk a little bit further. So I'll probably I doubt I'll risk down here. Maybe I may even take trade up here instead of down here. Probably on this one. Then yeah, sure, I could risk down here. So with something like this, 75 looking for 150, which we don't get up until here. So, and we'll add to our trade. Hmm. I think we just stick to our normal 25%, man. Because the 12.5%, I can already see it's going to be a hassle. I don't want to over trade. I don't want to over get in. I just want to get in good trades because I just want to get in good trades and get just hold one trade for a very long time. I don't want to over trade and stuff. Mm, yeah. Okay, let's go to another day. Now that we're back to just trading our normal trade, let's go to another day and see what next day is going to look like. What's this? 2 a.m. 1, 2, 3, 4. 1, 2, 3, 4, 5, 6. Alright, so these zones are passed. It's closed down here. We have this line obviously holding. We also have this zone right below it. This zone right here. And then for the highs, we have obviously we have this line. Let's do these two lines here. Obviously we have this line still. We also have this zone here too, so let's not forget that. Let's just put a line there for now. Put a line here, and let's put another line here. And then there's a green line obviously. So these zones have been traded through. Oh shit, we have this nice beautiful zone here. Basically this whole thing. Just like this. Holy, right at the zone. And then we have a line up there. Just put a line there. And yeah. It's not that important. This one is not that important. That's why I said line, but this is important. Semi. Not too important. Semi important. Yeah. Alright, let's see how this behaves in this zone. One. Oof. Okay, that's not bad. Came down to this rejection area and rejected nicely. 7:30. Let's wait for the next candle. That's okay. It's okay. It's okay. It's not okay. 160. Oh, that's heavy. I'm taking a risk up here. 130. So let's take that risk at 130. Before we take that, let us not take that because looking at the prior candles, there wasn't much rejection. So, and that doesn't really have volume downwards. So let's hold. Okay, now we take this long. He's long, risking just down there. 90. Now let's see how it behaves up there. Obviously, it's 25% we're risking, right? So, okay, now let's really see how it behaves. Nice. So that's 90, looking for 180. Profit acquired. So now we're not in a trade anymore. Want to see how. Honestly, this box is a little big. It's a little big, man. Sheesh. It's compassing this. I'm gonna remove this box. Remove this box. I'm gonna put a line here, and I'm gonna instead I'm gonna remove this line. I think this line is fine. I think these lines are fine. So next up is up here. Let's see how it behaves up here. Nice. It's holding. Rejection. Yeah, I don't mind taking this trade. It looks bullish, but it's gone up without any pullback. So I'll take this trade, risking right over that, risking probably just 20 above, so 80. I don't like that candle at all. I don't like that candle. I just knew it. I did not like that candle at all, bro. I don't like this candle at all. See that candle? You just close your trade. Just let it go. That means it wants to continue its momentum. Also, where's our red line? Red line was down here. Okay. And then next green somewhere above. Okay, so we had one trade. We had one break even, I guess. And then one trade, one break even. We're watching. Still just keeps going up. Damn. See what I'm saying about? I guess the only trade here would be the break of this, cause of this candle breaking this. But so it'll be something like this, risking down here, 25%. But it's pretty high, right? So that's the thing. It's pretty darn high. Let the trade go there. So let it go. Let it go. This consolidation was pretty high. It's different from this, right? Like this, small, nice, compact. It's compact. Take that. This, not too compact, but we took it on this close because and we're risking all the way down here. Like this, I can understand, but this one, honestly, if we take a trade like this, we should probably be looking to close the trade early. Probably looking for 1 hour or something. Take it at 80, looking for just like 1 hour. Maybe just close the trade early or something. Because I've noticed too many times this thing not working. It doesn't work. We're looking at a pullback here. Now, what do you want to do now? That's the thing. There's no trade here anymore. That's another trade right there. But the question is, has this one broken even or not? Has this one is this one out yet? So 85, 190, 200 up there. That's good. It's not too bad there. This volume though. Wasn't much volume coming down here, but now there's volume there, so be wary of that. Break even, I guess. I don't like that candle. Wasn't it was volume here, but it wasn't much. But so now there's volume here. So now I'll be waiting to what's it called? Now I'll be waiting to for a pullback up so we can take a short because of the volume there. If we get that, but or we can get a pullback to this line here because the low is down here. Rejection of the line. High is just up there. It's not too bad too. 145. Wait for it to go higher if he wants to go higher. Oh, it came down here. Nice. So yeah. So we'll now take this trade here. Take this trade here. Risking down here first. 100. Looking for 200 first. Holy. Goes back all the way to this point. That's not too good. Oof. Okay. We're break even now. The reason we're gonna make it very quickly break even because if this thing falls, it may drop. With the volume is using to come down, it may just continue dropping. So we're break even and we're waiting for this thing to take profit. It's not good. See what I'm saying? With the momentum it used to come down, it may just continue dropping. Kind of thick, thick black candles we're seeing, bro. Yeah, ugh, disgusting. The candle that got me thinking, raising my eyebrow was this one. This particular one. If I was to come back on this trade, it will be something like this. Risking down there, 140 now. Looking for 280. Holy shit. I remember there was this massive drop here, so it may never get there. I'm just gonna close whatever trade you have long here and just run. And then he goes and takes profit. What a freaking retard. Stupid ass trade. Oh, I guess we gotta put a break even instead of closing the trade. But yeah, 280 is up here. And then there's this zone here that started all this. So we have rejection. We have a black candle, we have rejection. Let's see if the next candle is nasty. Next candle is kind of nasty, but it's not too bad. Okay. Uh, Oh, we're already past 12:30 at this point. Probably just close the trade in here, knowing that this place might not hold, and then people will probably just go and take a short here. A lot of people probably take shots there. Take shots there, risking higher there, right? Okay, we'll do one more day and let it go. Let it go, let it go. So yeah, when it came back to this was the high we're watching. Came back to this high here. Risk is just down there, so we'll take this trade there, risking down there. And then when this happened, I don't know. Yeah, it's fair to be break even. You break even there, and then when this kind of happen, you can now take it and put another break even at this point or something. At this point, you probably just put it break even, and then we'll probably take profit up there. Yeah, it's not too bad. All right, let's go to the next day, final day, and I'm done with this back testing. We've been doing this for. Oh shit, my bad. I wasn't even looking. I was looking at something else. Anyway, it doesn't matter. We've been doing this for an hour, three, four, five, six. Okay, so we what line do let's just do this line first of all, and then let's clone this, put this at 3975, right tip there, right tip there. I guess we should have had this there because so yeah, there was okay momentum, and then with this I guess maybe because of this momentum there and that rejection there, maybe you could have taken a trade, but I doubt it. If you're going to take a trade, you have to have been down on this momentum candle risking up there. I'll be risking 100 or something, looking about 200, yeah, something like that. But then once this candle happen, you'll be very, very, very wary because things like this can happen. You can just continue. I guess maybe the only time you should have taken a trade was, I mean, here, risking probably just risking till, well, it's 55, looking for 95. So maybe 100, looking for 200. Should have got in on this candle. And waiting for it to get down here. So and it got down. So we wait. Either it gets down here or it pops back up. We'll take another trade short. So, all right. So, what are the points we're watching on this? We have this bouncing off nicely here. So we can draw this here, just like that. We have this line here. You're just gonna put it on this high there, and then we have these highs there. be just like this. That's all that is free. I guess it's down there too, but I don't think price is gonna come down there. Whatever. There's a lot of drop, a lot of momentum downwards. It's rejecting now though, so let's see what it does as market opens. Holy shit, the momentum is going. You could actually take a short here, risking the high, cause it's a lot of momentum downward and closes like that, bro. Holy short right there, risking the high. But damn though, I mean that's not my trade, but damn, that's a heavy drop and no rejection. So now I take a long, nah, no rejection on the prior account. You have to wait for the next candle. Huh. No rejection still. Huh. 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 What the hell's wrong with this thing today? Came to this base here, rejected. What the hell's wrong with this shit? It's really momentum is really to the downside, like heavily. There's only this high to risk, bruh. If you had caught this trade with the momentum happening here and here, and it popped up and then came to this supply zone and rejected. Once this kind was coming down like that, if you had caught that trade, you could have risked up there, maybe getting in right there, risking up there 160. That probably maybe would have been the only trade looking for 320, 320. That probably would have been maybe the only trade that you'd have been able to see. Honestly, it's crazy, man. This thing was crazy. But other than that, we've just been waiting. This is where you want me to have been fun to trading, but other than that, we're waiting. I didn't think you'll come down to this zone here, but it did, eh? So something like this. Not much rejection on the prior candle, so rejection there. We'll watch. So you're saying we should have taken a trade here, taking a trade here, risking down the 90, 100, looking for 200. Damn, that's crazy, man. That's absolutely crazy. Waiting for price to get up here, waiting for price to get down there. See how it behaves down there. Nice rejection though on this right here. Beautiful rejection. It's just because of the prior candle, it's iffy to take. That's all. But if you were waiting patiently for this and then reject it like that, one could have taken that trade for sure. This trade right there. Probably somewhere in there even. Who knows? I just take a short there. Looking to risk. Just above that. Just 150 there looking for 300. Done. And then who knows? Once this candle close, take that trade long looking for. It's not a falling knife yet, right? There's a lot of choppiness. The choppiness is not it hasn't started wiping out yet, but for sure there's bearish momentum. So let's see. I want to see how price behaves there. I want to see how price behaves. So we need something more bearish. That's bullish. The only low available is down there unless it comes back to risk this base, I guess. Should have formed a base there before going up though. A low rather before going up. Should have had to be here. Risking down there. 100, looking for 200. Nice rejection. Taking a short there. Short there, risking high above that. Damn. Damn. So you'd have held this if you're taking this then. You're watching nice rejections, but the risk is all the way down there. So when you pop down like that, you take that, risking just the low there. 100, looking for 200. Should get down there. Rejection, rejection, maybe. So you just put it as break even, I guess. Because you want to see how price will behave on this high. Made a base here, I guess. So that kind of makes sense. Nice rejection. Let's continue. That's what it looks like. I think I'm done, man. I'm done. I'm tired. Nice rejection there. Nice volume downside there. I'll take that short because today has had a lot of volume to the downside. So we'll take that short, risking up there. Seeing how it behaves here first. Mm, mm. So it's uptrending, I guess. Nice volume though to the downside. So I guess you could have taken this long here. Long here, risking down on this low when it came back to retest this zone on this high here. Good volume. Get out of that trade. Get out, just get out. Whenever I get out of a trade, it just does that. Fuck you. I can freaking control Z now, can't I? Stupid ass stock. Anyway, right there, get so 90. 90 looking for 180. Right above the highs. So we know there's a lot of volume here. So we just put it as break even now. Just put it as break even. Volume is coming in. I guess we're already done trading break even. And then we take profit. First of all, let us acknowledge the fact that our zones are getting really good. Our lines are also really good. So now we just need to take our trades according to these points. So today we waited instead of taking a trade off of continuation and whatnot. We waited. It rejected this zone with volume, but the prior candle was really heavy. You could have taken a trade on this right here, long. You could have because of the volume the bullish candle had, risking down there 130 because it bounced right off the zone, right? So 130 looking for 260, and you'll be expecting to break out of this, but then once it broke this, and so you could have put out yourself as break even if you wanted, or if you broke like this and it came back up like that, you could have closed your trade for break even if you wanted, or we could have taken the loss. Knowing me, I probably would, because of the way the stock was trading today and because of this candle, and if I notice this, everything aligns to a continuation, I would just get out of that trade, get out of that trade easily, break even. And then this happens, so we wait. This was a nice bullish move, comes down, take this trade, risking the low there. You get your profit somewhere up there, right? So let's even say our zone was like this. So come here, risking the low of the zone right there, 115, looking for 230, get a profit in here. This pulls back down, coming to retest this wicks. You retake this trade. You retake this trade here, risking below of the zone again. Or if you were, because if it was me, I'd probably take the trade there and risk the wick of, so 140, looking for 280. So we get our 280 up there, right? And then when we got the pullback to the zone, we're watching it pull back. It pulled back to this high. There was no low, so we'll not take the risk on that high. This was because it broke through the zone, so we're taking a retest of the zone. Basically, this whole place was the zone. It broke through the zone with momentum. We're taking a retest of the zone. That was why we took this trade. Otherwise, there was no real low for us to risk. It broke through the zone, so we want to wait for a retest of the zone, and there's a low for us to risk. So rejection, that was not enough. There's no volume in that. Pullback, rejection, that's good enough. We take that long there. So those have been our three trades. If we're patient enough to not take any trades here, but again, like I said, this is not too bad a trade. But this one, it's a trade because a lot of people will have the 1 minute whatever they're trading from down there, and this zone rejected like that. This was a trade. So if we had seen this, good. If we had not seen this after this candle with this kind of momentum, we really want to get out of this trade. Probably just get our break even as fast as we can. So we really want to get out of this trade if we can. Or so let's say one loss, win, win, win. That's 3 wins, one loss. It's not a bad play. All right. I'm tired.